Yes, again, good morning. Yes, I just want to quickly share with us of this trade on US oil. Yes, on US oil. Now, going by the strategies we use, we come straight to the daily time frame, and from there we try to pick out our daily high and our daily low. But looking at this situation here, going by the Falcon strategy, you are you can equally, if you're unable to spot a high, you can go towards the back, just go backwards a bit, look at the datas before the current datas we're looking at. Let me just make us understand that quickly. Looking at this particular candle, it broke above. There was no way we can actually pick which is the daily high or daily low. But by going by the Falcon strategy, you go back and pick a candle that formed before these other candles as your reference point. You make that your reference point, okay? Because all you're expecting that, okay, breaking these arrows, this point stands as a resistance point, as a what this bullish candle tried breaking through this resistance point, but it couldn't. And this other bullish candle came to try, but it was just the wick that broke a little bit above it, but and immediately bounced backwards. So in as much as we don't really have any other data other than from this day here, this candle here, and that is dated back to April, the 3rd of April. That is the only reference that we have. So we have to make do with this particular candle we are seeing here, this bullish candle here, taking that as our daily high. Then we pick this point as our daily low. Beautiful. So just for us to have a marker, just to have a region to work with. Then moving on straight away to the 4-hour time frame. From here, it's looking so beautiful. We can see how the market was actually moving. The trend has actually been upwards. It's a bullish trend, and it's moved in this direction. You can look at it. Moved up here, came down here, moved up again to this point, and came down to this point, trying to okay, let's try and get a good structure. So standard analysis, from this point on, the price moved up here to form a higher high, came down to form this higher low, which is a equal point as well, moved on to give us this higher high, then came back to form this higher low, went on to form this higher high, and from the higher high it gave us this higher low. And from there, because over the weekend there was the market has actually been so funny, lots of gaps experienced in various currency pairs, as well as energies and all that. So we had this. Then coming this morning, we had this higher high, which is so funny in a way. It's a bullish candle that went that high, and it closed just the way it is and all that. So what do we do in essence after now? What do? You go to your tools, pick your trend line, then you pick this point here and connect it to this low here. Yes, this point here, and you connect to this point here. Yes, seems the market has actually given us, is forming a structure that is descending. It's an ascending structure, ascending pattern that is given unto us, indicating that we're going to have a bearish run. And so you duplicate this trend line, then you take it in between, like the strategy we use, ratio 1:2. So you pick the highest points within those 2 points. What points am I talking about? This is regarded as point A here, and this is point B. So in between them, pick the highest points here. So that's where you place your arrow, which is this point. Beautiful. So we just try to make it look beautiful. Yes, and that's it. So beautiful. So what do we have? We have a points already, and this is point 1. It's first touch. This is first touch. We have in a second touch as well, and this is our second touch, and we had a third touch as well. Yes, also beautiful. And adjusting this high we placed there, we'll drag it to just fitting well. That's it. That's a beautiful. So, and based on the strategy we use, we say once the price touches, give us a third touch, gives us a third touch, and closes above, closes below the hook point. Then we can now place an entry. So this candle here is the one that closed below the hook point. It came down and closed below the hook point. But before we saw this, it was a bit late. This candle was already forming, but no qualms. So what we do in essence is, okay, since the trend, the general trend is a bullish trend, is a bullish trend, then this buy you just need to be very, very careful. When you trade against the trend, you need to be very, very careful. So what we do next is to use our arrow here, arrow 2, just come here, then you get beautiful, to tell us how far this price is actually going to go. So we take here, we mark this point as our take profit. This point is our take profit, and our stop loss will be above this third touch. Yes. And what we will try doing in essence is, anytime we're trading, we always ensure we maximize, we really maximize the profits therein. So if it's not up to reward, risk to reward is not up to 1 to 2, then it's not a good one for me as a person. So my TP would be on this 90% region, while I place my stop above this hook point a bit. Yes, so we place that, and that is it, and that's it. So I hope you really look out for this trade as well. It's a beautiful trade. It's a beautiful trade. It's a smooth trade. You can look at what happened on the 1 hour chart as well. It's a beautiful trade. So you maximize it, and let's see how far we go on this US oil. Let's see how much we are able to make from this. Thank you.